Hey guys, what's up? My name is Shane from AwakeFX. I want to welcome you to this trading video. In this lesson number 4, we will be speaking about Fibonacci retracements and Fibonacci extensions, and I find these extremely valuable in my trading as part of a trading strategy. So we're going to look at what a Fibonacci retracement is, what an extension is, the different percentages we use, and then I'm going to show you some chart examples, literally from today, of the ES. So make sure to stay and watch to the end, and you'll see exactly how I can use these tools in order to help improve your trading. If you like the channel, please like and subscribe. I appreciate each and every one of you that watches these videos. So let's have a look at the charts and Fibonacci retracements. Okay guys, so we're going to learn about Fibonacci retracements for entries in our trading, and then Fibonacci extensions for possible exits in our trades. Now, when we're going long or when we're buying, the way we would use our Fibonacci retracement tool is by dragging from the bottom left here up along the major swing to this point here, the 0% line, and that will plot automatically the 50% retracement, 62%, 79%, and these are the retracement levels here below. And then above, the tool will also plot your negative 50%, negative 100% above. So one of the best places to enter in a long trade is when price, after a move up, has pulled back into a 50% retracement level or below. So anything below the 50% is considered value when you're going long. And on the next slide, I'll show you how the shorts would work. So when we're going short, we would drag our Fibonacci tool from the top left of the swing down to the low, and then that would automatically plot our 50% retracement level, 62% retracement, and 79% retracement above the swing. So this could be your potential area to get short, and then the targets would be down below at the minus 50% or minus 100%. So these are the extension levels below. So this will make more sense when I show you a chart, and it's really great that we have a chart from today. I like to use up-to-date information with you guys. So we're going to have a look at the 1-minute chart of the ES, the S&P 500, and show some examples of this in action. Okay guys, so we're looking at a chart here, a 1-minute chart. Each candle represents 1 minute of the S&P 500, the E-mini ES chart. And as you can see, based on the previous 3 lessons, what we spoke about already, so definitely watch them lessons if you haven't done so. You can see we have a move from this absolute high up here, move down, lower high, lower low, lower high, and then prices here at this point here. In this situation, let's say at 8 a.m. this morning, what I do is, based on the previous lessons we spoke about, is I'll mark up my buy side up above. So this maximum swing high here, I'd mark that in as the buy side. Okay. And then this absolute swing low down here, I would mark in as the sell side. And what I'm waiting for here is, will price break down below the sell side and take out that liquidity, like what we spoke about in lesson 3 about liquidity, and will it break them back up above and give us a market structure shift? So let's see what happens. So I'll just delete this here, and I'll just do bar replay on this. So we'll move forward bar by bar. Price comes down towards the sell side. It's the prime time of the day as well. We're after 8 a.m. New York time. And we'll move forward, and then price breaks down below, see? And that's very significant. We're after taking the sell stop orders below the market. And let's see what happens next. Because price could continue moving straight down, and then we're not interested in taking any trade. But if we see a market structure shift, what would that be? We'd have to break this high here, okay? And that would signify a market structure shift. So let's move forward. So price starts moving up, moves down again, and we'll move forward. And once this happens, see that break of this previous high, we have a market structure shift. I'll mark that in here. So that's the market structure shift. Okay. And then I'm waiting then for price to come back down and get into a long position. Because my belief then is once we have the market structure shift at this time of the day, and we've already taken out the sell side, the probability is that we may have something like this. We may have a move back down, somewhere in here, and then price to move maybe up towards buy side. So that's what I'm looking for. So at this point is when I use the Fibonacci tool, which is down here at the bottom, the Fib retracement. So I highlight that tool, I drag it from the absolute low to this most recent high, and then I'm looking maybe to get long if price can come down into this 50% level. Okay, let's see what happens in the next candle. Okay, so price moves a little bit higher. So once price moves higher, you just keep moving your Fibonacci up until we start getting that retracement. Okay, and then what I'm doing is I'm placing an order, like a buy order, to go long. So I'll get my long tool here just to show this would be an area where I would get long, let's say just under the 50% retracement level. That would be where I would look to buy. I put my stop loss down below the low. And then what I'm doing is I'm looking to target up, all the way up here to either this 50% negative extension level. I'd look to get out there. And that would be a 2-to-1 reward to risk ratio. That's what I do most days. 2-to-1 reward to risk, I'm happy, done with the trade. Or you can target right up here where the buy side is, either or. So let's see what happens next. The price moves higher. So once it moves higher, I move my Fibonacci up. I readjust my order where to buy. So I buy maybe just below the 50. Okay, stop loss down below here. Let's see what happens next. Price is slowing down there. Boom. Then we get a move down. Look, and it takes us into the trade. We have a buy order there. We would be long right now. And then the expectation is that we should move up into a new trend towards the buy side or towards our targets above the market. So let's see what happens. Now, price could come down lower here again. That's why you don't want to stop loss too close. I always leave it below the lower swing because price could come back down here, take out these lows again. But I'm happy that I got in at an area where there's a discount below the 50% Fibonacci retracement. Get in there and look for the market to move higher. There we go, we break a new high. The market moves up. And this is literally a chart from today on the ES in the 1 minute. Do we get, boom, see we hit our negative 50% extension, Fibonacci extension level. So that there, if we were just to exit at that point there, we'd be 2.3 reward to risk ratio. What does that mean? If you're risking 1%, maybe let's say $100 or let's say $1,000, you're making $2,300 on a $1,000 trade. On a $100 trade, you'd be making $230. So it depends on your account size. So let's see what happens. Price moves up. Boom, we take out the buy side. And we even go much further, up to the negative 100% level even. So that would be a point at which, at that point, you'd be up 3.4 reward to risk ratio. So there's a fantastic example. So just to recap then, what did we see? We had a move, lower highs, lower lows. Price breaks the low, sell side zone, moves higher, we get our market structure shift, and then we're looking for that nice juicy entry just below the 50% level, get into an area of discount, an area of value, and we enter the trade and we let it run up to either this point here, I'm more than happy to take it off there, or even to where buy side is. So that's an example of this working there from today. So I hope that makes sense. The Fibonacci tool is a fantastic tool to use. I use it a lot. And if I just clear up this chart a bit, let me just delete some of this off here. I'll just show you, for example, an example of on the short side, for example. So let's say we moved back over here in the chart. Let's say we were at this point in time here. You know, price is, you could have your sell side down here below, buy side above. What happened here? Price moves from low to high, low to high. Market structure shift, we break that low. So at that point, I would pull a Fibonacci from the absolute high down this way to this low. See that low there? And then we would be looking for a short trade, maybe up here around the 50% zone, going short. Let's see what happens in this occasion. It moves lower, so then you move your Fibonacci lower, potentially looking at a short trade up here when price retraces back up above the 50% level. Moves lower, so you move your retracement, your Fibonacci level. Let's move forward. Oh, moves right then, okay. Then price begins its retracement. We wait for our shorts above the 50% for a short trade. Boom. There's an entry short, for example. Now there's more to this. I look at times of the day and everything when I'm trading. You know, you could be entering short here, stop above the highs. You know, how far will price move down? You know, so moving forward, you can see price rejects and moves lower, breaks lows. Okay, into this sell side zone, an area where you get out of the trade. I wouldn't like this trade personally myself because look, the reward to risk is quite low, 1.17, you know, because of the swing low over here. So there are other things to take into consideration, but as you can see, the Fibonacci tool is extremely powerful. Recommend you back test this, have a look at some charts, use the tool. And if you have any questions on the video, let me know. And please like and subscribe to the channel if you're enjoying the content. I hope to make a lot more useful information there for you. I do appreciate each and every one of you that do subscribe. It does motivate me to make more videos for you. So thanks very much for watching. Appreciate it, guys, and have a good day. Happy trading. Bye-bye.